Rahul Sharma, the head technicals and derivative research at JM Financial, is joining in to discuss about key market levels as well as how stocks are expected to shape up. Rahul, thanks for joining in. This has been quite a disappointing year for the bulls so far. I mean, the Nifty is down about 4%. The mid-caps are down about 5% year to date. Do you see more pressure on the charts? And, this budget day low that was breached yesterday, do you think the markets could stay below that through the course of the next many months?
Yeah, hi, very good morning. So definitely, markets have been into a downward spiral, and even breaking the budget days lows. But we have to see this market in three different magnifying glasses. One is the very micro short term, the short term, and the medium term. So if we talk of the very micro near term, there is a good possibility, since because we are in an oversold territory, a bit of bounce back can be expected until 17,600, 17,650 odd. But post that, I think it's basically we may see the bounce back fizzling out and the Nifty heading for further downside. Now, technically, the structure is quite bearish ever since we broke the 17,800 mark, and this was a multi-week consolidation that we broke down from. So my sense is somewhere around 17,000, a bit of support the market can expect, a bit of buying opportunity one can look at. And the final capitulation may happen at 16,600. We believe over the next 2 to 3 weeks, the entire down move should play out. The entire down move should mature. And this is, as of now, a market where any rises can be looked upon as a shorting opportunity, especially in the short to medium term. Speaking of relative comparison to the US markets, so last year we enjoyed the outperformance vis-a-vis US markets. Now the entire froth is completely out. So if you see the Nifty 500 versus the S&P 500 relative comparison, we've come back to the long-term support line of the entire outperformance of the US. So my sense is, if you take like a 2 to 3 month kind of a view, we have to be a buyer in this dip, maybe around 17,000. Maybe another tranche can come in at 16,600, 16,700. And my sense is we should see a reversal happening in the next 2 to 3 months. So very micro short term, a bullish bounce back can be expected from here. In the short term, we remain a sell on rise kind of a market where we are expecting 17,000 floor to be tested. And if you have a slightly medium term outlook, which is 3 to 4 months, I think this dip can be a good buying opportunity going into the next few months.
Okay, got that. Rahul, good morning. Prashant here. So what are the best setups according to you? Let's get down straight to actionables in your opinion. Which are the best setups in terms of risk rewards from here? Go on.
Yes, Prashant. So, there are a couple of sectors which we like a lot. I think the best, in terms of the technical setup, the risk reward, the headroom, is the public sector enterprises index, PSE index. Now, in that, NTPC is something that we like a lot. The stock has been relatively holding off well in spite of what has happened in the broader market. We believe that there is a good 25 to 30% upside to be had in NTPC in the coming months ahead. In fact, around 170, 175, one can look to buy. There is a very strong base that the stock has formed around 160, and one can expect a target of 200 in the next few months and possibly 225 by the end of this year as well. So from a macro perspective, PSE space looks very good. From a trading perspective, I think cement as a sector has held on very well. So we have our eyes on the sectors which haven't fallen much. So if you take something like an Ultratech cement, the stock is pretty robust in terms of the technical setup, trading above all its short-term and long-term moving averages. Around 7,000, 7,200, you can accumulate long positions with a stop loss maybe at 6,800. And we believe there's a good chance that the stock heads towards the 7,800 to 8,000 mark on the upside. The third stock which we like very much on the macro technical outlook is Bosch Limited. The stock has come out from its multi-month, I would say, resistance levels at 18,000. The stock is ripe for another round of an up move, which where we can expect levels of 21,000 on the upside in the next 12 months or so. So if you're an investor, I think this is one space which looks pretty solid, can buy with a stop loss placed at 17,000. And we believe, banks have been a problem area for the markets for sure. But now what has happened is banks have become a consensus trade. Like for example, on Friday session, we saw the combined open interest shooting up by 37%. And every time we've seen a consensus trade happening, we've seen the market reverses, the market at least shakes out the traders during those periods. And we believe that, one round of short covering move can be expected in the market, which is when again it will become a shorting opportunity again. So all the stocks that we've discussed, I think it's best to do it in tranches. Maybe a couple of tranches over the next 2 weeks would help in terms of the entry price points for these investments.
Okay, so you spoke about Ultratech Cement that you like. You also like Bosch. Anything else that you want to leave us with in terms of trends or either stocks or sectors?
Yeah, so speaking of the rest of the market, so we have leadership is something that is clearly lacking in the entire scheme of things. But in terms of the conglomerate, so there is a comparison between ITC and market. So for example, when in the late half of January, we saw ITC taking off, market sort of taking into a nosedive mode. This time around, something's the other way around is happening. ITC is losing steam, and market is slowly, gradually building up momentum for a reversal. So I think this pair trade where you go short on at this point in time, it looks like a short on ITC and the long on Nifty, especially for traders. I think there is a good chance that this pair trade works out to be well. So ITC is one stock that we advise to book profits as of now. Maybe in a dip or something, investors can look to re-enter. The stock has done its bit technically. If you have long positions in this, it is advisable to book. And we believe there's a good chance there is a pullback that happens in the same.
Rahul, actually, I put out ITC in the morning on Market Laser as something which perhaps which bears watching. Maybe if we have the chart, we can kind of put that up once again. It is bumping into an important resistance zone. And you're saying that the reverse may work. The market does well and ITC perhaps goes the other way. That is the graphic that I put out in the morning. Yeah, there you go. That's ITC. We'll see. But I think Rahul also concurs with that view. Anything else, Rahul, in terms of specific names, outliers you may want to mention, which comes up on your radar?
Yeah, so in fact, telecom is one space where we feel there can be a bearish outlook. Like for example, Bharti Airtel is one stock which has been continuously grinding on the downside. Yesterday we saw in the last two sessions, it has been sustaining below the 760 breakdown point. I think there is a good chance we could shave off another 5, 6, 7% from these levels. Metals is one area which is strongly in the grip of bears. So this sector continues to be a sell on rise kind of a sector. Banks have done their bit on the downside, so I think it's very heavily oversold, so might as well avoid shorting that. In fact, PSU banks, some of them showed some very good green shoots in yesterday's session, and we could very well see that translating into a bounce back in the bank Nifty. So I think as far as sectors are concerned, telecom remains a negative. It is metals which remain a negative. Sectors which look good, PSE. Sectors which look good, cement. So I think this is a mix. This is a market where you have to have a mixed strategy, a long and a short approach, because clearly we've not seen major trends developing on either side. And I believe it's best to trade as per levels and take one day at a time with the kind of sector rotation we are witnessing on such a fast and massive scale.
Okay, thanks a lot for that. Very helpful with all the charts that you're seeing for us. Thanks, Rahul, for joining in. Let's slip into a quick break. On the other side of the break, Manisha Gupta is here to put focus on the commodity market.